Mcguire is joining us on the show to talk to us about that. Peter, hi, thanks so much for joining us. First up, on aluminium itself, these prices that we are seeing, is it purely just a reaction to what China announced, or there is that fundamental impact that is going to be a bit more sustainable as well?
Well, good afternoon, Anisha. I think a couple of things. First off, you see that the coal complex has taken a little bit of a washout over the last week or two. Aluminium's down, zinc, tin, certainly copper. And I feel as though it's going to be interesting where that runs over the rest of this, well, the rest of the week and the rest of the month, and whether that downdraft. You've also got to take into consideration a big rally as far as US dollar index. But yes, some of that LME prices, you can see the markets there. It's been very, very choppy and quite volatile. So, that's the nature of the base metal and the industrial metal market, and it never ceases to surprise.
Okay, so the metals definitely is surprising with the kind of move that we are witnessing. But do you expect further strength to continue in all of these, as you talked about? Because there are a lot of moving factors. Dollar, of course, is one which has shown considerable strength. But this entire US-China tussle, which is expected to aggravate from here on, what's the best way forward as a tactical trade then?
Well, I think first off, one needs to be considerate or consider these changes as far as policy naturally with President Trump, and that's a few months away yet. So in the short term, if you're going to trade over the next couple of months, then you've got to be really conscious as far as whipsawing and where the market is trending, and whether you're going to see a return of that rally that we experienced a couple of months back. But if it's not going to happen, and then you've got to think, well, if those tariffs come into play and what impact that's going to have to the likes of China, then I would think it's going to add considerable headwind to their export market. And naturally, how does China play into that? It has to, if it either absorbs the tariffs, which is very, very difficult, or changes its own internal strategy. So yes, it's a wait and see approach. And President Trump is unconventional, and we've just got to see how unconventional he plans to be.
Right. Hi, sir. Soumeet also joining into the conversation. Now, shifting focus from metal to oil. For the last couple of months, we have seen Brent crude averaging around or below the $75 per barrel mark. And with no major trigger now, at least for the next 3 odd months, do you expect crude prices to remain on the lower side, or is there some trigger that you see could take the oil prices higher?
Well, I think a couple of things, Soumeet. I mean, you're going to be appreciative that the war premium certainly is all but, worn out, and it's evaporated from the market. It's been a structural weakness over the last couple of months and just a downdraft, and really very, very heavily sold off from those highs that we saw going back, 6 or 8 months ago. Then the next part of it, of course, is weather outages, and nothing, if you were to see something as far as impacting production, then that would be something to consider. But the other side, of course, is that if you don't see any geopolitical concerns, then probably you're going to see, the high 60s, even as low as 65 for Brent. That's what a lot of analysts are talking, and that could, materialize. So we're just in the wait and see, but it's certainly been downdrafted. It's been incredibly, it's a great market to short over the last couple of weeks.
Say for 2025, what is that range where you're expecting Brent crude to be?
Well, I feel as though, again, if you destructure the market in the sense of geopolitics, and you don't have, but you've got, President Trump coming in, which could throw a large hand grenade into the energy complex, I would think realistically you're going to be cheaper prices. He wants to increase production. He wants to look at his own consumption as far as the US. They're really engaged. They've got a very dynamic energy, head of energy coming on board. And the whole matter of fact is going to be one of drill, baby, drill. And I think quite easily, significantly lower prices from here. So I think that's going to be a win for consumption and for consumers, maybe even the 60 handle for Brent.
Let's see whether that really transpires or not. That's the word coming in on metals and crude and a lot of other moving parts as well. Thanks, Peter, as always, for making time and speaking with us.